Thank you and welcome to the March market outlook for blockchain.com, titled Crypto in a Time of War. It's kind of hard to imagine that we'd be talking about what we're talking about today a month ago. It's just emblematic of how fast things change in the world and in crypto. So I'd like to start by introducing myself and then talking a little bit about us as a company, and then I'll hand it off to Garrett Heilman, who will walk us through the update. So I'm Jason Karsh, filling in for our co-founder, Nick Carey, who's on a plane right now, but I lead marketing here at blockchain.com. And when we think about blockchain.com, you go to the next slide, at a very high level, we think of ourselves in terms of our top level numbers. So 81 million wallets created in the world, over $1 trillion of crypto have been transacted through our wallets. And we've seen already over 60 million monthly impressions on blockchain.com. So we sort of think of ourselves as both a brokerage and an infrastructure player in the crypto space. And when you think of our products in general, we have a consumer business and an institutional business. So we have our wallet, which is probably our most distributed, most well-known product, our exchange, which is for active traders who want to trade on margin or get low fees and access to high liquidity. Explorer, which is probably everyone's favorite way to examine what's happening on the Bitcoin blockchain. Charts are my favorite feature. And we also do a lot of product partnerships, such as our recent partnership with Cello and launching the Cello Euro for folks in Europe who want to convert their euros into Cello euros and also be eligible for rewards via that partnership. On the institutional side, we're a one-stop shop for institutional clients, whether you're a fund looking to do trading or getting custody, or whether you are a market maker looking for liquidity execution, a DeFi active network participator, or a crypto miner. We provide a one-stop shop for crypto institutional services, from trading to, again, custody, to really structured bespoke products. So if you are listening and you are an institutional player who's looking for merchant banking and prime brokerage solutions, we're your one-stop shop. We also like to every month talk about what we've shipped. So we've launched a few new asset listings, and we have a unique promo. So if you buy 5 new assets that your account has never had before, you'll get a $5 BTC bonus. If you buy 10 new assets that your account hasn't held before, you'll get a $10 BTC bonus. And if you buy 15 new assets, you'll get a 15 BTC bonus, I believe sometimes later this month, mid-month. So go check out our products, go explore assets that you haven't allocated to, and don't put all your eggs in one basket, as they like to say. We announced also this past month that we are moving in Miami to a large space in the neighborhood of Wynwood, which is where all the cool startups are. And we're taking over a building called the Cube Wynwood, and it's now going to be called the blockchain.com building. So if you're in Miami, please look us up. We're always hiring. And also Miami this past week actually was the blockchain.com Miami Paddle Open, which was a lot of fun. We had a lot of folks come in from around the world, including celebrities, business elites, and the best players in the paddle circuit, which is one of the fastest growing sports in the world. So if you're a paddle fan, definitely look up the Miami Paddle Open next year. And if you're in Ukraine, on a more somber note, we've removed all blockchain.com fees so that access and empowerment to crypto products in Ukraine in this time of crisis are without any frictions. So with that, here's a look at our annual rewards rate. So these are annualized rewards that are accrue daily but are paid monthly, and they go up as high as 13.5% and are really great to explore if you're looking to hold your crypto and want to see it put to work. I think the exchange sort of speaks for itself. But on a final note, we're hiring. We have over 80 open positions, and some of our top positions right now are institutional marketing and sales enablement, senior site reliability engineer, and product manager. The team's growing like gangbusters. We've over 4x'd since this time last year, I believe, and we are going to continue to grow. So it's a great time to get into crypto, a great time to learn the crypto industry via blockchain.com. So please visit blockchain.com/careers to learn more. And without further ado, I guess I'll hand it over to Garrick. Last month we had founder of Avalanche, and today, I guess, Garrick, you'll talk about what's happening today.
Yes, thanks, Jason. So we'll briefly go through the monthly numbers, both on-chain data as well as the market data, and then we're going to get to our special guest, our very own Amadeo, who's a senior product manager at blockchain.com. So quickly, the February numbers, we definitely saw a positive turn for crypto in the month of February after a big down month in January. Bitcoin up over 12%, Ethereum up over 8%. So, you know, a bit behind the rally in Bitcoin. Still, both are down on the year. Bitcoin's down almost 7% on the year so far, and Ethereum down 21%. Over a longer time horizon, crypto continues to be the best performing asset class. But for the year, interestingly, it's of these classes, asset classes that we're tracking, it's gold and the dollar that are up for the year. Gold up 4%, seeing a bit of resurgence, and in the dollar also as we enter into this period of turbulence and uncertainty. These traditional kind of safe havens, the U.S. dollar and gold, are rallying, and you know, one of the things we're tracking is how crypto, and in particular Bitcoin, is performing relative to gold and equities. It's been a confusing picture, to be perfectly frank. You know, for a lot of this year, we're seeing crypto kind of trading much like a tech equity. And the correlation between crypto and tech equities, or equities in general, has been quite tight. That's changed just of late. You know, it's just not enough data to really draw any kind of major conclusions about, you know, whether we're entering into a new paradigm where we're going to see crypto decoupling from equities and trading more on its fundamentals. But you know, we'll talk here in a moment about the current kind of state of play and how some of the value proposition and use cases and properties of crypto are really, I think, on display and being validated by current events. I think another factor that's worth mentioning with regards to markets, of course, is the Federal Reserve and the macro interest rate environment. There's definitely been a major shift in market expectations around interest rate hikes, and that had been weighing on equities, that had been weighing on crypto and markets in general. You know, the expectation of a 50 basis point hike at the March Fed meeting, that's gone. You know, I think many are expecting just a 25 basis point hike in interest rates, so a much less aggressive rate rising picture than even just a few weeks ago has emerged, and that's we think helping to support crypto asset prices. If we turn to on-chain data, we saw an increase in on-chain activity for the month of February, modest increase across the board, you know, an uptick in the number of addresses and payments on-chain, percentage of blockchain.com share of transactions in the Bitcoin on-chain world also increasing up to 25% transactions and almost 10% of payments. Hash rate continues to go up 5%. This is a key metric around the security of the network. Transaction fees are up slightly from $1.80 to $1.83 per average transaction. And actually, this is relevant to one of the things we wanted to talk about with regards to the current conflict in Ukraine. Is we've seen very significant fundraising happening. You know, I think over $50 million at last count have been raised via crypto by the Ukrainian government. And you know, you see that average transaction fee of just $1.80 for Bitcoin. That allows people to actually send funds, even a small, say, sum of say $10 to an address that the Ukrainian government's using to raise money without a prohibitively high fee. If you were going to try to transfer via your bank, $10, you may be paying $30 or $50 in an international wire transfer fee, and it'd be an exorbitant fee and not be worth it. So this is kind of illustrating one of the benefits of crypto assets to move money across borders at a competitive cost relative to traditional banking rails. And even if you can get the funds to someone, that's always a challenge too. We've seen pictures lines of people outside bank ATMs trying to get access to their funds. There's been various restrictions placed on accessing funds in various countries. And so this, non-custodial digital bearer aspect element, which we'll talk with Amadeo about here in a little bit, of crypto is also being validated as something that can be useful in times of conflict or when financial systems are shut down. What else can we say about how current events are going to affect and shape the outlook for crypto? Well, we're watching, of course, the price of commodities go up, and oil in particular, which flows through. When the price of oil goes up, it flows through into so many elements of the economy. It certainly would be reasonable to think that this is going to put, again, more inflationary pressure on prices, energy prices certainly directly, but also food prices, and that certainly, I think, has been a core theme for crypto and Bitcoin in particular, as a potential hedge against price inflation. Bitcoin has a fixed supply. We've written about this, how it's arguably the hardest asset in history. You can refer to our blog and podcast on that note, and why many people turn to Bitcoin when they are concerned about price inflation. Certainly the current environment raises a lot of concerns around continued upward pressure on prices in the months to come. There's also, more calls for regulating crypto. And, this is something we also need to carefully watch. However, I want to say that government officials, when they're pressed on this, they're not expecting, sanctioned, entities or individuals to use crypto somehow to evade sanctions in a massive way. And so we think some of the headlines that have been coming across on this topic are a bit overblown. And are inciting fear around, a crypto regulatory crackdown that just isn't really warranted when you dig into it and say, okay, what size flows would a sanctioned country have to move through something to be able to evade sanctions in a major way? Crypto, has a degree of transparency, a traceability, and law enforcement's become very good, as we've seen recently, of identifying illicit activity on blockchains, tracing that activity and recapturing funds. The largest ever seizure of funds by the Department of Justice was just a few weeks ago, billions in the Bitfinex case. So we have some questions and doubts around how effective crypto would be for evading sanctions, and we think that concern might be a bit overblown. But we'll be writing more about this in our blog Outlook, so look for that. And now I'd like to turn to Amadeo, our special guest. Amadeo, welcome to the blockchain.com webinar.
Thank you, Garrick. Thank you, Jason. Good to be here.
Great. Well, we have a standard opening question we always ask all our guests, which is, how did you earn your first money?
So I was actually, I was raised in the Dominican Republic, and I was one of the few people who had access to a kind of CD burner. So I sold custom CD mixes back in primary school. Bit, on the gray side of of kind of legality back in the day, but it was definitely very, very fun.
Awesome. That's a new one for the show here, so appreciate your sharing that. Well, let's tell us your story. You mentioned you grew up in the Dominican Republic. How did you get started career-wise, and of course, when and how did you get into crypto?
So I got into crypto back in university. So my flatmate and I were running a little startup where it was kind of like Foursquare back in the day. So we paid people in rewards for accomplishing day-to-day tasks, and these rewards were this made-up virtual currency that kind of only existed in app. And 6 months in, it wasn't really going very well, and we were like, okay, how do we kind of spice it up? And we heard about Bitcoin, the ultimate form of virtual currency back then in late 2012.
Okay, I was going to ask you. You got to put a date on it. Thank you.
Yeah. So I think that Christmas just kind of really went into the rabbit hole, reading about the white paper. We pivoted our startup in early 2013 into creating a Bitcoin exchange, which later became CoinFloor. So I've been working in the industry for 9 years at this point.
That's awesome. And you've seen a lot during that 9 years.
Yep.
Cool. So tell us about your role here at blockchain.com. You're a senior product manager. What does a senior product manager do? And why do you like that role?
So the key, I would say a product manager has two core things that they're responsible for. One is the product roadmap. So you're the steward and the shepherd of the roadmap, taking into account all stakeholders, needs, customers, the business, and really trying to drive a good product roadmap. And then the other one is giving leverage to the team by being a bit of a communications router, driving alignment with all stakeholders. A senior product manager, or I'd say an experienced product manager, makes gets more leverage out of a roadmap and drives more alignment out of a product team, a full stack product team.
Awesome. And the wallet, which we talked about at the start of the show, is one of our flagship products. One of the things we're best known for. We'd love to hear about your vision for the blockchain.com wallet over the coming years. It's undergone a lot of changes of late. What else is on the roadmap, and how do you see the wallet being used in the months and years to come?
Yeah, so one of the things that, or the thing that makes me, the most excited about working at blockchain is the fact that we, build software to help folks self-custody their own money. We think that that's an absolute right of people to be able to do that in this day and age. And it couldn't be a more timely, situation. There couldn't be a more timely need for folks to self-custody their funds with the situation, in Ukraine and Russia. You see people, struggling to get access to their cash held in banks, run on ATMs. And even, when I was talking about 2013, when I got into crypto, I remember that summer, there was a big kind of risk in Cyprus, where banks, essentially appropriated funds from customers. Anyone that had over 100,000 euros worth of assets got a 50% haircut in their assets, because there was just no liquidity in the Cyprus system. And so these kind of global events really highlight the need for a crypto wallet, where folks can self-custody their funds. And historically, this has been more of a use case of storage, right? Folks wanted to be able to store their own money, pay people, and the kind of user experience for that was very much a payment system, right? But I think as we move forward into into a world where hundreds of millions of people own crypto, and crypto native applications are being built, the wallet starts becoming more of a gateway into these applications, into this crypto world, as opposed to only being a place where you store money and then you transact. And some of these applications are absolutely extraordinary. There's a great decentralized lending marketplace called Aave on the Ethereum network, which lets folks borrow and lend billions and billions of dollars without a middleman, right? And so we're going to continue to see those use cases, and the crypto wallet is going to be right at the gateway of letting folks manage their keys to those assets, and also be the gateway, sort of the browser into these applications. And self-custody as a trend is going to continue to rise as the need, is demonstrated by some of these global events.
Yeah, definitely. I'm glad you spent some time on the self-custody aspect of our wallet and why it's so important. And I just want to even spend a little more time, because this is such a, I think, important and often misunderstood kind of element of the power of crypto assets like Bitcoin, and how new something that's digitally bearer, and how it's like cash, and how you can control it like, yourself, in a way that prevents someone else from reaching out and just preventing access to it or taking it away from you. But with that power comes great responsibility too. And when you have, control of your seed phrase, there's huge responsibility to make sure you manage that safely. And I wondered if you could just spend a little more time kind of talking through those aspects of self-custody and why it's so important to manage your seed phrase carefully.
For sure. So, in kind of the traditional finance world, we entrust other, participants to custody our money. So you go to your bank, you deposit some money, and they hold it for you. They ultimately lend it out to other people, and that's kind of how the current system works. Crypto and Bitcoin originally kind of flips that on its head. So that money, that balance is sat in a public ledger. Think of it as a spreadsheet that everyone has access to and everyone shares, where your ownership of that balance is essentially determined by your ability to prove that you own the key that unlocks the ability to transfer that balance. Private key cryptography is used in our everyday lives to secure. Anytime that you go to a web browser, you get to be able to assert that you're in the right website, before you enter any credentials. The challenge with self-custody is that if you lose access to the private key, which is backed up by the seed phrase that you mentioned, Garrick, you might lose total access to your funds. And so this is a whole new level of responsibility that folks have to take that maybe they aren't accustomed to. Ultimately, not everyone is able to do that from a technical perspective or an access perspective yet. But that's something that us at blockchain we're trying to solve for. So making it easier and easier for folks to self-custody these funds. Historically, going back to the seed phrase, when you created a Bitcoin account, you had to back up your seed phrase before you could kind of continue using it. And this is a 12-word, English phrase. If you gave access to that seed phrase to someone else, they could restore your wallet and steal your crypto. Or if you lost it and you needed to access your crypto, that money was there, kind of locked forever. At blockchain, we're trying to make it easier for folks to not even have to think about the seed phrase. So we have a feature called cloud backups that, for example, if you're an iOS on your iPhone or an Android, it automatically backs up an encrypted version of your wallet into iCloud, into Google Drive, that alongside your PIN, which is easier to remember than a seed phrase, and your access to iCloud or Google Drives lets you kind of get back access to that crypto. but yeah, it's the sort of thing where the way I like to think about it is how much money would I be comfortable with letting my friends and family uh, sort of store in a self-custody blockchain.com wallet. And our goal is to make it you know, safer and safer for folks to hold larger amounts of funds in this new world, which you know, it's something that I think we definitely have some improvements to make, but we were probably one of the best at doing today.
Yep. Yeah. Thank you for that. And I'm glad you've touched on how, especially during this time, with, like you mentioned, people having trouble getting access to funds, maybe having to relocate, and transport and bring value with them. You know, how having a self-custodied wallet can be really, really powerful, and you know, even save lives potentially in situations like today. So we've talked about some of the challenges here with and responsibilities with come with self-custody. Let's talk about some of the things you've worked on that you're most proud of. What things in particular would you highlight that you're particularly proud of having contributed to at blockchain.com?
The thing that comes to mind is the rollout of our segregated witness transaction support. So historically, blockchain.com has been responsible for almost over 35% of all Bitcoin network transactions have been issued via a blockchain.com product. And in about 4 years ago, 3 to 4 years ago, a new transaction format called SegWit, or segregated witness, was introduced into the Bitcoin protocol by an opt-in mechanism. So it was a soft fork, which made it possible to store more transactions on each Bitcoin block. Blockchain.com rolled out access to SegWit last year. And as a result, we saw the share of the percentage of transactions that were SegWit transactions in the Bitcoin network rise up to almost 90% SegWit usage. And the fees in the blockchain, in the Bitcoin network actually dropped by north of 35% for everyone in the network. So this was a massive ordeal because, in essence, you're trying to change the wings of the plane while it flies. Folks need to transfer their change in a Bitcoin transaction over to a new address that was SegWit enabled, and so yeah, that was a very fun project to work on. That I think you can only really experience, at a company at the scale of blockchain.
Yeah, but it's made a huge, as you mentioned, contribution to bringing down fees and making small transactions like we talked about, like with fundraising, more viable, which was one of the criticisms of Bitcoin for many years, was that, oh, it's too expensive and the fees are too high. And so it's pretty awesome that to be a part of that massive improvement to Bitcoin. Turning back to just being a product manager, what advice would you give to anyone curious about pursuing this type of job, and how would they go about it?
So I think there's one generic piece of advice, and then there's one that's more kind of geared towards a product manager in crypto. So a generic kind of tech product manager, I think, needs to have a level of almost mastery in one core sort of competence area, whether that's data science or user experience / design or engineering, or maybe sales and business development if it's a B2B product. I think you should have one core competence that you bring to the table. And if you don't have a core competence, you should work on getting that before you can, so that you can be a better product manager. I think specifically in crypto, there is a lot of knowledge that is sort of expected when you start working in crypto, building crypto products. That I think you can only really get by using a bunch of crypto apps out there and a bunch of crypto networks. I've actually introduced multiple product manager friends into the crypto space over the last few years. And my top advice is go and look at the top 20, DeFi protocols. You can do it in our DeFi page, for example, and start using them. Spend $50 trying to educate yourself on all these things, because it's it's quite a deep rabbit hole.
Yeah, no, I want to echo that. I mean, just it's one thing to read about crypto and kind of just try to think about it. It's a whole different thing to use it. And you really can't begin to wrap your head around it, or I think, kind of, get to know crypto until you actually start transacting and using wallets and interfacing with different protocols. So yeah, 100% echo that sentiment. So talking about UX, user experience, this is one of the things we've kind of thought about, and in our investment thesis is one of the barriers to broader crypto adoption. We are up to 100 million plus probably crypto users globally now, but still well short of a billion users probably. What is the biggest and most important user experience improvement that crypto needs to see to solve or to grow the community into that billion and beyond number of users?
So I think when we started in crypto, Garrick, it was kind of expected that folks understood what a crypto address was, and if you're not familiar with it, it's the equivalent of your bank account number. I think the biggest user experience improvement is to try to make it easier for people to have certainty when they're paying an external party, that they are, they're paying that person as opposed to just sending money to some address into the wild. So, going to pay people as opposed to addresses, which are just public keys, really. And this has kind of implications for the broader sort of on-chain identity, space. Whenever you interact with an on-chain decentralized application, you're also interacting with some address on the network, right? And you're having to trust these wallets or these websites to tell you that, for example, Uniswap, that a particular address belongs to Uniswap. And I think if we could have a better way of letting users map real world identities into addresses, that would reduce the amount of errors that users make. It would reduce the number of scams that occur in the industry, and just lower the barrier to entry for regular people. Another big one is the seed phrase. It's still completely a completely random experience for folks who come into crypto and have to back up a seed phrase. It's not something people are used to. So that would be my close second.
Yeah, no, two big areas of opportunity, and I think it speaks to also how incredible it is. We've got to 100 million users or more, and still have some of these major user experience challenges. It just really speaks to kind of I think the value proposition of crypto, and despite how difficult some people find it to use, they really want access to crypto for various reasons. And as we improve the the user experience, I mean, it would seem like getting to 1 billion is certainly definitely possible.
For sure.
So we're just about running out of time here, and we wanted to see if we could get you to make a prediction, a non-price related prediction, because we always have to be careful about making crypto price predictions. Very difficult to get that right, especially if there's a strict time table or date attached to the prediction. But what prediction would you make?
So it's interesting because I think a lot of these predictions are sort of have the price assumption baked into them. But I think going back to your point earlier, Garrick, of crypto being treated as a risk asset or not in terms of the market. I think my thesis is that in these kind of uncertain macro times, crypto is not going to be treated as a risk asset, or is going to lose that coupling that we've had in the last year or two. And that's going to make it, it's going to be a really attractive asset class for governments and large financial institutions to hold portions of their balance sheet in crypto. And I think that would be, I think that would happen for currencies like Bitcoin. Obviously, we're going to have to see whether the risk asset thesis plays out or not.
Yeah, no, it's one thing I didn't mention when I was talking about crypto in a time of war, but this weaponization of fiat currencies like the US dollar and euro. I mean, look, without passing judgment on the rightness or wrongness of that, it does lead some market participants to think about where they want to hold their funds going forward, and and that potentially opens the door for exactly what you're saying, for people to look for something more neutral, more independent, that's not going to be politicized or caught up necessarily in some of the things we're seeing. But there's other reasons too. Just we talked about inflation and the absolute scarcity of Bitcoin, the scarcest asset in history, arguably. As the price of gold goes up like it's doing, guess what? People start digging deeper and going after gold deposits that weren't previously economical to mine. So the supply comes up as price goes up, and that just doesn't happen with an algorithmically scarce digital asset like Bitcoin. So Amadeo, thank you so much for taking time to share your thoughts on crypto, and what it's like to be a product manager, and hope you have the energy to stay in this space for another decade. Certainly with a lot going on these days, it's important to pace yourself when you work in crypto, huh?
Absolutely, Gary. Thank you so much for having me, and always a pleasure.
Thank you.